When we budget for a cash flow statement, we might need to budget for the amount of cash we'll get from debtors. So for example, let's say we're doing a budget and we think there'll be credit sales of $50,000 plus $5,000 GST. And based on that, we think we'll get both discounts given to debtors and bad debts of 5% of the total owing from credit sales. So, do the discounts and bad debts apply to the GST exclusive amount of $50,000 or the GST inclusive amount of $55,000? And it all depends on the question. There's no rule here. Just got to read it very carefully. So in this case, it says that both discounts and bad debts will be 5% of the total owing from credit sales. So based on that, we would take the GST inclusive amount because that is the total amount owing. So when we're doing our calculations, we have two choices. We're either 5% of 50,000 or 5% of 55, and it's a choice between 2,500 versus 2,750. So it's an important distinction because the amounts are different, and we just said that if it says the total amount owing, we're going to take the GST inclusive amount of 2,750. Let's use the exact same question but change the wording of one thing. Let's keep credit sales at $50,000 plus GST, but let's say discounts given to debtors will be 5% of credit sales and bad debts will also be 5% of credit sales. So in this instance, it doesn't say the amount owing. So when we look at do the discounts and bad debts apply to either the GST exclusive amount or the inclusive amount, well, here it just says the credit sales. So based on that, if it's just saying 5% of credit sales, we would actually apply the discounts and the bad debts just to the GST exclusive amount. So in this instance, we can see that our choice out of 50,000 or 5,000, we will actually take the one that is only the 50,000 exclusive amount, and that'll be equal to $2,500. However, when we're figuring out how much money we get from debtors, that's a little bit different. So in this case, it says here, a budget is being prepared for July 2015. So we can see we've got our budget is just for this month here. And to do that budget, we're going to need some info from the previous 2 months here. So based on that, we've been given credit sales figures as follows. In May, credit sales were $10,000 plus GST, which is a total owing of $11,000. In June, it was $8,000 plus $800 for a total owing of $8,800. And in July, it's $9,000 of sales plus GST for a total owing of $9,900. And here's what we're told. So we want to figure out how much money we're going to get from debtors during July. Well, we're told that 80% of debtors will settle their accounts in the month after sale, and those people will get a 2% discount. So if we made a sale in month 0, so whatever month it is, doesn't matter, in the next month, so month plus 1, 80% of those people will pay us back and they'll get given a 2% discount. And then 2 months later, we'll get 15% of those debtors in the second month after sale, and that'll leave 5% of debtors who will become bad debts and never pay us. So looking at doing this budget now, we can start to put together some numbers. So looking at May's sales, May's were $10,000 plus GST, so that was $11,000. So we know 1 month later, we'll get 80% less 2%. It just comes down to the calculation now. How do we figure out how much this is? So we've got two choices. We could say, is it $11,000 times 78%, which is 8,580, or do we do 11,000 times 80%, which is 8,800, and then times that by 98% to get 8,624. So the logic being with that one, we take out the top one, we just take out 78% of everything because that would be 80% less 2. And the logic with this one, we just take the people who owe us money and are going to pay this month, and then out of those people, we just times that by 98% because they're going to get a 2% discount. Now, out of the two choices, the correct strategy is actually to do the bottom approach, and that's because if we did the top one, we'd actually be giving discounts to every debtor effectively because we'd be doing 2% of everybody getting a discount, and that's not true. We only want to give a discount to the 2% of the people who paid us back. So we need to apply the formula underneath. Now in the second month, we're going to get 15%, so that's quite simple. We're going to get 15% of the total owing, which is 11,000, which will be 1,650. And that'll leave 5% of bad debts, which is 5% of 11,000 of 550. So in this instance, we can figure out, we're doing the budget, how much cash will we actually get from May's sales in July. we get 1,650, but we might need to apply that to many months just to figure out the budget for 1 month.